Hello everyone, this is Jordan and this is your video market update. Today is Friday, May 2nd. Now before we get to precious metals, there's a couple other things I want to look at. In this chart we have TLT, which is Treasury bonds at the top, long-term Treasury bonds I should say. At the bottom we have TLT divided by JNK, so we're essentially looking at Treasuries against junk. Now Treasury bonds have been strong, and they've been getting stronger in recent weeks. And part of the reason could be that money is starting to move from riskier segments of the bond market, such as corporate bonds and junk bonds, and into safer bonds, such as treasuries. No one really talks about the bubble in the corporate bond market. I mean, we use bubble to describe way too many markets. But that is one market that the Fed really has had a major impact in and really has made a bubble of, in my opinion. So no one talks about that. I don't think we're going to get a huge crash, maybe a slow unwind there because the Fed is not going to let any bond market crash. But aside from that, what's important here is that if you look at that ratio, it's testing 9-month resistance. And so if we get a breakout there, which I think we should expect in the coming weeks or months, that's going to signal that this trend of moving into safer assets in the bond market should continue. And of course, that's going to continue to benefit treasuries, which, I mean, remember at the end of last year, sentiment on treasuries was extremely bearish. We're seeing that unwind. And looking at the TLT chart, this short-term strength that we've had, that looks like it should continue and be able to push TLT up to 115, 116 or so. But I would continue to hold bonds, especially treasury bonds. They definitely look bullish. Let's talk about the Nasdaq, which to me looks more bearish than the S&P 500. At the top we have, I should say, the top of the chart, we have two breadth indicators. First is the percentage of stocks trading above their 200-day moving average. The second is the amount of new highs in the Nasdaq. Now, both of these data series are smoothed with a 10-day moving average, and we see major divergences in the data. So, in other words, the Nasdaq has continued higher while the breadth indicators have peaked and made lower highs and also lower lows. Now it looks like the key level on the Nasdaq is going to be 4,000, and so if the Nasdaq breaks below 4,000, that would probably confirm that we've seen a cyclical top. Now in addition to that, I love to follow the 400-day moving average. That moving average is at about 35.90, if I'm reading that correctly. And just remember that tops in a market are often a process. So and as far as the top, I don't see an extreme 50% bear market. I think we should probably see minimum 20%, maybe 25, 30%. That's something that looks more realistic to me. But it's really difficult to know how that's going to play out. I mean, it could be something that plays out over 18 months. It could play out over 2.5 years. So you just don't know. But I think the main thing is I really don't see a whole lot of upside, very minimal upside at best for this market over the coming years. So this is really something you want to avoid, especially if you're a long-term investor. Now, with respect to the S&P 500, this is a sentiment indicator which looks at the RIDEX funds, and it's called the RIDEX ratio because you have a ratio of all the assets in their bull funds divided by all their assets in the bear funds. And this is something that wasn't even that extreme until the end of 2013, early 2014. But looking at this, it's looking very similar to 2000, and so this is definitely a warning sign that retail investors are too bullish. They're extremely bullish. This indicator, not at the present moment, but if you look at the recent highs, that was about at a 14-year high. So this is not a good situation. if you want to be bullish on equities or the overall market. Here's another sentiment indicator which is not positive. This is from Elliott Wave, courtesy of sentimenttrader.com, a fantastic website for sentiment information. And the data shows the retail, essentially cash position in money market funds as a percentage of the overall market cap of the S&P 500, I presume. It reached a new all-time low of only 2.8%. So there's no cash on the sidelines. It's all invested, be it in the S&P 500, be it in the corporate bond market, primarily those two markets, in my opinion. And, looking at this chart, I didn't see it at the market bottom in 2009, but just so you know that this indicator works both ways, it was 12% at that market low 5 years ago, and that was essentially a 25-year high in this indicator as far as the cash position. So, I mean, again, this is just another piece of damning evidence if you want to be an equity market bull. Now let's get on to precious metals, which over the last couple weeks have really been difficult to trade. In the chart, we have the weekly candlesticks, GDXJs at the top, GDX in the middle, GLDX at the bottom. Now, let's talk about the real big picture, which is that we're in a bottoming process. I believe that the bottom is already in. I don't see the December low giving way. So I think the realistic worst case scenario is these stocks break below their support. But if they do that, they would get close to that bottom in December, and that would be an excellent buying opportunity, which is what I was sort of alluding to in my editorial. Now, what happens if they don't break below these supports? Well, you want to wait several weeks. You want to know that there is confirmation that we've kind of made the third bottom here, or the right shoulder. You don't want to give it only a day or two. You really want to give that a couple weeks. And also consider there was a pretty hard reversal in March, a big sell-off there. So even if the market is making a higher low here, I don't think it's going to explode to the upside. I think it could rise and then consolidate for a couple weeks. So I think those are kind of the two scenarios that you can trade around. I'm focusing on, not to plug my service too quickly, but I'm really focusing on individual stocks. There are some that I'm going to buy tiny positions in or small positions in next week, just because there are some stocks which I do think the risk reward is very favorable. And that doesn't mean every gold or silver stock. I mean, there's some stocks that look like they could be great buys in the next week or two, and then there's other stocks that may not be great buys for 2 months or even 4 months. So you really need to, if you want to get specific, there are some things that you can, I think, go ahead and take small positions in. But, with respect to the entire market, these ETFs, it's a little bit more difficult to, get a handle on where the short-term trend is. But again, the bigger picture is we're in a large, long bottoming process. We have seen the bottom as far as price. And I think at worst, once we get into the fall, I think by that time these markets are really going to be ready to move a lot higher and break out of these bottoming formations. So I definitely think that your medium or intermediate term bias should definitely be to the upside. And, another reason why I am bullish, just look at silver. I mean, look at this chart of all the silver bear markets, and this tells me that if silver hasn't already bottomed, then it's likely to bottom in the next month or two. I mean, where we are with silver right now compared to all the other bears would be the second worst bear market of all time, the worst being the 80 to 82 crash, which is not included in this chart. But just looking how far we've already sold off, history tells us that, yeah, we could sell off a little bit more, but it's if it does sell off, it's only going to go for another month or two. And in addition to that, the silver stocks, while silver is basically trading around its bear market lows, the silver stocks are nowhere even close to that. Look at SIL, look at SILJ, look at that in my editorial. the silver seniors and juniors, they're trading way off their bear market lows. So that shows a lot of relative strength there. That is a strong indication that we're getting ready to make a major move higher as far as kind of the longer term trend. That's all for today. You can go to my website at thedailygold.com. You can opt in to receive my free newsletter. There's a box at the top right corner. And I also have a premium service. There's a couple links to that on my website. Thank you so much for listening. I wish you all a great weekend.